Welcome, guys. In this video, I will be talking about price movement. Yeah, how price move, how the chart candlesticks move. So it's gonna be very quick and precise as usual. Let's go. We have basically three types of movement that the candlesticks does. We have the uptrend movement, we have the downtrend movement, and we have the sideways, which is also called the range movement. I will explain those three and just show you examples of the movement in the chart. So let's go. We'll start with the uptrend movement for starters. Let's see. Okay, uptrend movement basically is where price tends to create higher highs and higher lows. So price keeps breaking structure to the upside. Price breaks structure to the upside continuously, creating a trend to the upside. So yeah, this is basically what the uptrend movement is. Price keeps creating breaking structures to the upside like this. Break of structure, price break structure, yeah, sorry. Price break structure like this, price break structure like this to the upside continuously. And that is what price movement to the upside looks like. Price break structure again, the upside, same thing again, just continuous like that repeatedly. We could term that as a bullish trend, that is price moving to the upside. However, the bearish structure is just the opposite of the bullish structure. Price moving to the downside like this, price keeps coming to the downside like this, coming to the downside, breaking structure to the downside. That is basically what the bearish structure is. Yeah, we have break of structures to the downside. Break here, um, break here again. Just price breaking structure to the downside. So a lot of people tend to call a lot of terms, higher highs, higher lows, pinpointing those, but those are just a lot of terms. So in an uptrend, we have higher highs and higher lows actually too. So this is price moving. Say price moves from here, creates this high, comes down, creates another high. Notice this is a high and this is a high, but this high is higher than this. So that's where the whole higher high and higher low comes in. And this is a low, this is another low, but this second low is higher than this. So that's where the whole higher low comes in. So to me, it's just price breaking structure to the upside continuously, which is the bullish movement, price moving to the upside, uptrend. Then the bearish movement, price moving to the downside, price keep breaking structure to the downside. In a bullish movement, we tend to look for buys, looking to buy price to the upside. And in a bearish movement, we tend to look for sells, looking to sell price to the downside. Then comes the in between, the range. Price keep moving in consolidation, not breaking structure to the upside, not breaking structure to the downside, just creating something like this. That's the whole range idea. Remember, it's not going to be picture perfect like this in the chart, but just grasp your idea. Yeah, this is consolidation. Price keep moving in a channel, not going to the upside and not coming to the downside. Something like this, range high and range low. So that's the range high, and this here will be the range low. Notice price just keep moving in this zone. It's not going above, it's not coming below. Sometimes you could see some wiki break kind of thing, like wick sweep stuff like that. That's why I say it's not going to be picture perfect like this. So the whole idea is price moves in three dimensions, like three different ways. We have bullish movement, price moving to the upside, the bearish movement, price coming to the downside, and the range movement. Let's label these. Let's just give these labels. Bullish, bullish trend. Sorry. Yep, and this will be bearish trend. Bearish. And this is range in price. This will be the range in price. Range in price. Yeah, so that is basically the type of movement price is going to make. Um, let's go over to the chart and see examples. What the bearish movement? This is Euro USD on the 12-hour time frame. Yeah, 120 minutes, 2 hours time frame. So notice something. Just me looking at this, you could easily spot both the bearish and the bullish trend. So you could see this here. You could see this here. The way price is moving here. Price comes like this, like this, like this, like this. You see, price just moves all the way down. Bearish movement. Remember, I told you it's not going to be picture perfect, but ideally with eyes you could see price is coming down. Then for the bullish, we have this ideal bullish price movement, something like this. Price keep going to the upside, going to the upside, going to the upside. And we could ideally call this move from this zone to this zone a bullish movement. Price keep breaking structure to the upside. Price keep breaking structure to the upside. Then comes the range. Let's see. Let's see if we could see a range. All right. Yes, I think I've seen one. So look at this zone here. We have this block here. Let me mark it with a block. We have this zone here as a range. Notice what happened. Price keep moving in between, not going to the upside, not coming to the downside until we have a break here. So this kind of move, consolidation move, is called the range. And let's see, yeah, it's most likely not going to always appear, but that's just how the range is. Okay, I think I've seen one small range movement here. Yeah, one small range movement here. Something like this is a range movement. So we have this again as a range movement. Let me mark it out. This on here. Price ranged. This, so price did not go up just like this. Just kept ranging until we had a breakout here. So that is basically the type of movement that candlestick make. Last price movement for you. Remember, three types: price moves uptrend, price comes downtrend, and sideways, which is the range. You tend to look for buy opportunities when price is going up, and we tend to look for sell opportunities when price is coming down. Thank you so much for watching this video. I'll see you in my next video.